What's going on YouTube? Welcome back to the channel and welcome back to some more crypto. So in today's video, I thought I would kind of share the Elliott wave secrets and some of the Fibonacci levels that you can use when trading. I'm going to try and do this as quickly as possible because I know you guys want to learn this as quickly as possible so that you can get on and get trading. I'm going to kind of just briefly go over what Elliott waves are. And then we'll move into kind of the price targets. Okay, so with Elliott waves, we usually would see we're going to do basic Elliott waves at first. I'm not going to go into any kind of technical stuff, but I'm just going to kind of show you. So in any kind of wave that kind of happens, if it's an impulse wave, we would get 5 waves to the upside. So a wave 1 and then a wave 2. Now, a wave 2 can't go, there are certain circumstances where a wave 2 can go below a wave 1, but in most cases, it's very rare, and to be honest with you, if a wave 2, let's say, went all the way down to here, then the chances are it's not a wave 2 anymore, all right? That's pretty much it. So just kind of look at that as your first rule in Elliott wave, that a wave 2 shouldn't go below the bottom of the wave 1 here. All right. Then what would happen is we would get a impulse wave 3 to the upside, and then we would get a retracement in a wave 4, and then we would get a wave 5 up. This is usually what you can see. You can see it quite often, especially if you look at the Ethereum chart at the moment. You'll be able to quite easily see when you get these impulses to the upside. So this is kind of the first 1-2 pattern, and then you will get the FOMO wave 3, then it will chase a little bit where it picks up more people that want to get in on the price action, and then it will go up in wave 5. Then what would happen usually, and there are different patterns that can play out, but we're going to keep this quite basic for now, is you would get a B, and then a wave C down. Let me just put the actual waves on so you can see. And that would be quite a usual pattern. And then what would usually happen is that after the ABC correction, if we are in an uptrend, you would then get another 1, 2, 3, 4, 5 up. So that would then become a wave 1. Put this in yellow. And then you would get, pretty small, isn't it? Let's just make that bigger. That would become a wave 1, and then you would get the wave 2. Wave 2 down, and then we would then start the bigger wave 3. All right, that's kind of how the process rolls, and then on a bigger time scale, it would then continue to repeat itself. I don't want to kind of confuse you guys too much. For now, we're going to stick with just the 5 waves, and then we'll get back into the ABC in a second. Okay, so when you can identify a wave 1 and wave 2, you would then be looking at getting in on this to catch the wave 3, 4, and 5. Just to kind of make you guys also aware, which I'm just thinking about now, which can make Elliott waves get a little bit more confusing, is in each of these waves, the wave 1, there will be a 5-wave move on a smaller micro time scale. So if you're looking on the hourly chart, if you went to the 15, you'd see 5 waves. Then in the wave 3, you will also get sub-waves like this. And then the wave 5 up. All right. One other key point with Elliott waves, I'm kind of sort of going all over the place here, but one other key thing with Elliott waves is that the wave 4 should never come into the price region of wave 1. All right, so usually a wave 4 would stop somewhere like here. If it comes down below this, then we've got an overlap, and then the chances are this isn't a wave 4 anymore, and then that would have just been an ABC correction before another 5-wave move down. All right, so I know it is getting a little bit more complicated, but I'm doing my best to try and explain it to you guys. So anyway, let's say if we want to now use the Fibonacci levels to detect a possible target for a wave 3. You would get the fib extension tool and you would measure the wave 1 length down to the wave 2, and then that would give you the 1.618 fib level for a wave 3. So I'm just going to put a little marker there for you guys. All right, so that would have been where the wave 3 should go. All right, so that 1.618 fib level. In some cases, you can get a short wave 3 that would go to either the 1 or the 1.236 fib. But in most cases, for it to be clear as an impulse, you want it to kind of at least get to the 1.618 fib. Some of the altcoins do go all the way up to kind of the 2 fib and can go even higher, especially in the FOMO wave. But a usual target is to aim for is the 1.618 fib. All right. So once you've got this wave 3, which is played out, and in here you can count 5 internal waves, which I already showed you, like this: 1, 2, 3, 4, 5, with no overlaps, because you don't want wave 4 to come into the region of you can then say, okay, we now have a clear wave 3 that has hit the 1.618 fib level, and you would then be looking for a retracement in the wave 4. So you would get the fib retracement tool and you would measure from the bottom of the wave 2 up to the top of the wave 3, and then you would be looking for a price target for a reversal to go up in the 5th wave. All right, now with a 4th wave, you usually can retrace to the 236 to the 3.82 fib. The last kind of resort is the 50%. In some cases, it can go down to the 618 fib in a wave 4. If it comes into the price region of wave 1, the chances are this move is not going to continue to play out. You can get certain scenarios where you would get like an ending diagonal or a leading diagonal where the wave 4 can overlap the wave 1, but it just kind of makes the whole pattern a little bit more unreliable. All right, so you could, if you were going to go long after you've seen this wave 3 and you felt like you missed out, you don't need to FOMO in at the top of this wave 3. You can wait for a retracement. You can put in some buy orders here, but then I would be looking to put a stop below the 618 fib level, or just below the wave 1 price level, because then you'd know the chances are this move isn't going to play out, and then you could catch the final wave 5 up. All right, so I hope that kind of gives you some understanding of that. All right, so we put that little target there. So it reverses into that target, you get your buy, you start to see it move back out, and you want to understand where this wave 5 is going to end. You would get the fib extension tool again, and you would measure from the wave 1. And instead of going down to the wave 2, you would actually go to where the wave 4 finished. And then that would give you another price target of the 1 fib or the 1.618 fib level. So that would then give you the target for the wave 5. All right, so you measure the length of wave 1 up to the length of up to the bottom of wave 4. See how this line is fitting with that. You don't use this line here, it's that line there. All right, that gives you then that price target of where the wave 5 would go. All right, so let's say everything's working out perfectly well. You're in the wave 4, you've gone up in the wave 5, you've got in this wave 2 position here, you've taken the wave 3, you may have sold at wave 3, rebought back in at wave 4, and then you can then go up in the wave 5. After we get to wave 5 and it hits, let's say, the 1.618 fib level, that would be a time to actually think about maybe exiting this trade because there would usually be an A, a B, and a C down. Now you can actually get some decent price targets of where this ABC will come to. And there's a couple of ways of doing that. You can get the retracement tool and measure from the bottom of wave 1 up to the top of wave 5. And then it can give you the option of where the wave C is going to go. I'm going to go through that with you in a second. I just want to talk to you about something else as well. With a wave 5, it comes down in a wave A. People will start to be taking profits as they know that the wave is coming to the end. People will not know that they will think that people will notice that this wave has gone up, and there'll be still buyers that are willing to buy this retracement. Just what happens, all right? They see it's retracing, they buy. It starts to go up in a wave B. People start going, oh my God, it's going up again. Let's continue to buy. People start FOMOing back in. Now, an overshooting wave B can happen where it goes above the wave 5. All right, and it gets people to FOMO in on this wave before it comes crashing back down in a wave C. Usually a wave B, let me just take this off a second. Usually a wave B the best way to measure it is by the top. You start at the top and then you retrace down to the wave A. And then you can look at the fib levels, and usually a wave B will end between the 6.18 fib and the 3.82 fib. So somewhere between these three fibs, there will be a reversal. Now, wave Bs are incredibly unpredictable. And I have my own theories behind this. If there is a lot of people that have gone short from this area, and there is basically a liquidity hunt to stop everyone making money, sometimes these overshooting wave Bs come into effect to stop everyone out, liquidate everyone, and then it continues the move back to the downside. That is why I believe we have overshooting wave Bs. It's just a liquidity hunt to make sure that there aren't too many people making money on these moves down. It's just the way the markets are designed. So depending on where the wave B finishes, you would then get a wave C down. All right. So if we take the fib extension tool, I could actually give you, once the wave B has finished, a target for the wave C. Now, there's a couple of ways of doing this. You can take the length of wave A up to the wave B, and then you get two targets. You get the 1 fib, which is the same length as wave A. Yeah. It's a 1-to-1 ratio. So that means that if it comes to this area, it's the same length as the wave A. All right. Or the 1.618 fib if it is quite a lengthy wave C. Okay. That's how you would get a price target for that with this move. The other way is to get the fib level and measure from the bottom to the top, and usually a wave C will, you can in crypto they like to maximize these moves, so I'll draw this on here from the 88.7 fib to the 50% is where this wave C target would end up. Somewhere in this box, we would then expect a reversal if the trend is up. If the trend is down, then sometimes the market fails. We get bad news or whatever, and it would continue to come down. If that's the case, if it goes below the 88.7 fib level and below the 1-to-1 ratio, then you know that this move has been invalidated and we're going to do new lows. So let's say you missed all of this pump here and you were waiting for a correction. I'm just going to get rid of some of these going to get rid of this here. And you were waiting for a correction before getting in, you could put a buy order or a few buy orders in this area here, and then put a stop loss below the 1 fib or the 88.7. Sometimes you do get double bottoms in crypto that can be quite bullish. So, you know, for me, I would probably try and put orders around this area here. Maybe stagger a few orders in here. Hopefully they get pinged before we get another 5 waves to the upside. So that's, you know, just to kind of give you guys some general knowledge of the waves. I do also want to kind of show you as well that in an A wave, it is an impulse in the correction, which would be a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. So if you went onto a micro scale, you'd be able to see those moves. And a wave B is usually a 3-wave move. So you would get an A, a B, and then a wave C up. Now in that move there, this A, B, C, you get 5 moves, 3 moves, and a 5 waves in the wave C. So you'll always be able to find these micro maneuvers on smaller timescales if you just want to kind of double check. So if you're on the hourly chart and you just want to kind of double check, was this wave A a 5-wave move? Go on to like the 5-minute or the 15-minute chart and you will be able to see 5 waves down, 3 waves moves, 3 waves up, and then the wave C is usually the longest wave in the correction because everyone's panic selling. And it usually gets to at least the 1.618 fib, which I showed you how to get to, and that would also be 5 moves. So I just kind of wanted to show you guys, that's kind of just one video I'm going to be doing on Elliott waves to show you guys how you can get decent buy orders in place. And then what you would do also, let me just kind of show you as well. So let's say now that this move was a 5-wave move up with an ABC. You would then count all of this and this as a wave 1, which I did show you a minute ago. Wave 1, and then this would be a wave 2. And then let's say this now does reverse to the upside. You can then actually formulate, let me just put this down here, a price target for the bigger wave 3. So then you would go like this from the wave 1 measure. Oh no, what am I doing here? So that would then be the wave 1, the wave 2, then you get a 3, a 4, and a bigger wave 5 up. Let me get rid of that. And then you can actually do a price target for this bigger move. So you take the length of the bigger wave 1 down to the bottom of wave 2, and then you would get a price target of the 1.618 to the 1 fib here. So you'd put the wave 3 there, and then you have the wave 4 there, and then you have the wave 5 going up like this. All right, a wave 3 is better if it does get to the 1.618 fib. And then you would do the exact same process which I taught you here on where the wave 4 would retrace, where the wave 5 would end. Then you would do another ABC. So I hope that was kind of helpful to you guys. I mean, if you can learn this, you will, be beneficial. You'll find so much from doing this and being able to kind of accumulate coins along the way if you can kind of locate where these waves are. So let's just say for a second you came in on the wave 2 and it went up to the wave 1, you'd have made 20%, let's just say. Then you sold at the top of the wave 5 because it hit the 1.618 fib. Then you would then sell at the top there, reaccumulate here for this bigger wave 3. Then you got the 4 down and then the 5 up, and then you would sell here, and then you would buy this ABC correction. And that is how you accumulate assets using Elliott wave and Fibonacci levels. So I know it's probably a little bit complicated for you guys. If you've got any questions, put them in the comments and I will try and answer them for you. I hope you guys enjoyed the video. Please consider subscribing to the channel, give it a thumbs up, make sure you hit the notifications bell for when I'm uploading future content. And with that, stay blessed. Take care.